Good morning traders, it's the 28th of April, my name is Mark and I will be bringing you the technical breakdown this morning from Crypto Collective. Before we get into it, let me just remind you that we are a group of crypto enthusiasts looking to bring you the best educational content from a fundamental and technical perspective. This will help you make educated assessments and decisions into which crypto you feel is hot and which one isn't. Now, please remember, if you are uncertain about any type of investment, please seek professional advice. All we are doing is producing educational content and how we are looking at using the market for our best purposes and sharing that information with you. We're going to start today by looking at Ethereum, and we're also going to show you something what is called time frame correlation. The best way of thinking about time frame correlation is it's a little bit like looking at a watch on your hand. It has the hour hand, the minute and the seconds, and as they all move at different speeds, but yet the time is still the same. So it gives you a little bit more information into each mechanical breakdown. So the best way we're going to look at this is we're going to start with Ethereum, and all four charts that you see here actually show the same price. So if I just highlight, you can see 2,617, 2,617, 2,617 and 2,617. Why is that? Well, it's simple, because the price is the price. The only difference is each one of these charts is showing a little bit more information than the other. So the top left we see the daily chart, the top right we see the 4 hour, bottom left 1 hour, and bottom right 15 minutes. So each candle represents each one of those time frames. So let's start with the daily. Always start with a higher time frame and basically what we call top-down analysis. So first thing I'm seeing when I look at Ethereum right now is we are approaching a key technical resistance level. So when I'm looking at managing my personal positions, what I'm thinking is whenever I come into some kind of structure like this, especially when it's key, I want to be kind of reducing my exposure at this point. It doesn't mean I'm going to close all of it, I just want to reduce a little bit. So let's take, for example, say this is at 2,500. We know it's a bit higher than that, but just for round numbers, let's say it's 2,500. I want to close 10 of my Ethereum. So I end up banking 25,000 US dollars. Now, ideally, I want to be buying when it comes into a key support level, somewhere like it has done previously. So let's say it pulls back and we go into 2,000. So I've now got 25,000 US dollars of my Ethereum portfolio sat in cash. Price now comes back down to 2,000 and I reinvest what my 10 units was here at 25,000 at a price of 2,000. That means I can now buy 12.5 Ethereum, because when we divide 25,000 by 2,000, that gives us 12.5. So all of a sudden, all I've done is, by managing my portfolio, not all of it, I've increased my original stake up here that I exited by an extra 25% should price do that. Now if price keeps going, well then obviously I've missed out on those 10 units, but what I have done is I've solidified my position, I've banked some cash and realized some profits. So for me personally, that's a fantastic way of managing my portfolio and what I look to try and do across all assets. So as we can see, Ethereum is coming to a key structure level. We did give out last week an idea of looking to get long around 2,000, which we can see is these structure points here, and the market has tested that several times with these 5 candles through here. Now, ideally, I'm looking for price to correct a little bit before we move on. However, if price does run away, that will be a clue that momentum is in the market, we've broken resistance, and I will be looking to re-add in. So again, it's one of those things, you know, you have to manage according to your rules, and mine is that I'm seeing resistance, therefore I want to reduce a little bit of exposure. But what are we seeing on the other time frames? So first thing we can see is on the 4 hourly, we've got another pattern, another rising channel within this little section here. So this rising channel starts from the 15th of April, and you'll see the low here is on the 18th of April. So if I now look at this, that is this section here. So you've got one channel within another channel, which means price could come back down and maybe not go as low as 2000, but may come down to 2200, which is this point here, and it's another internal marker. Now if the market is going to basically remain very bullish, then there's a probability that it's going to work within this pattern here and maybe not break below. So I'll be looking for buy signals here according to this pattern. Now one thing to remember is, are we seeing any sellers enter the market? Well, it's a little bit different from what we're seeing here right now to what we saw at this point. Although this point back here was a big fundamental news, whether it was the hash rate and all that scenario, we don't know. But what we do know is the market sold off heavily. We're not seeing that same kind of scenario right now. So the momentum in the market is definitely better to the upside. If we look at the hourly chart, over here you can see a little bit more candles. I'll zoom right in so you can see it in more detail. Do we notice anything different? Well, first thing is we can see the moving averages are separated, the order is good, the angle is good, so it's pointing to the upside. Only thing that I would say that is maybe a little bit concerning on this point is we can see that there's been a slight shift in structure, i.e. we've got a high, a low, a higher high, now a lower low. Is this a potential warning sign that the trend is about to do something like this? And if so, fantastic, we can look for our buy-in positions here to get long. Now, like I said earlier, I don't want to be buying in this area because buying into resistance doesn't make sense. However, if we break out, I will then look to be re-adding to my positions. And yes, it does mean that if it breaks out and goes higher, I will be adding in at a higher price than I reduce my exposure. But I would prefer to do that because this shows me confirmation that the market is moving higher, and I'm happy to then re-enter that market should I get my technical setup. So that's how we use time frame correlation. You can see how we use the different time frames to look for that key structure changes. Now if we look at the 15-minute, you'll see those changes a little bit more clearly. So we can see here we've got the impulse, then we've got the correction, next impulse. Now this correction is a lot deeper. You can see it takes out these structure lows, and we're having a little bit of a rally now. Now this rally, if it comes anywhere into this area and starts to reject and then move lower, then that is going to be a move below here is going to be our confirmation that we're likely to see an Ethereum correction. Now that's it for Ethereum. Let's move over to Sol, because Sol has been on a flyer of recent, and I want to take a look and see what opportunities might present itself here. So Sol, as you can see, is trading well above the 20 moving average. We've had a lovely strong impulsive move up, and now we've got one bearish candle. Yesterday was a doji, and today's candle is still in the early hours, so we can't really count, well, we can't count today's candle. Why? Because it's still being formed, and it could finish very bullish, it could finish very bearish, or it could finish as it is now a doji. So there's nothing we can take from today's candle apart from we are in a corrective move. So when we're in a corrective move, we've now got to start looking at smaller time frames to decide when that correction is coming to an end and impulse and buyers are coming back in. So let's move over to the 4-hour chart. What can we see on the 4-hour chart? Well, we can see that the correction is well in play. We've come down to test the weekly pivot, which is a nice structural point. It's also a previous cycle high. Let's just zoom in a little bit more so you can see it in a bit more detail. So here we've got previous cycle high, we've got some consolidation here, the blue line here, this is our weekly pivot, and then we've got this lovely kind of flag pattern forming here. So we've got fantastic correction taking place. A move outside of this descending trend line and flag pattern would signal and pave the way for further upside. So this is looking really tasty for more upside, but we need to see that break out of the flag pattern. Now if we just go to the 1 hour, we can see it in a little bit more detail. We can see the moving averages have rotated, we've crossed over, which is expected, they're lagging, but we really want to see now price break this descending trend line here. If you wanted to be let's say maybe a little bit more aggressive, you could look for buy limits in and around the 200 down here, but that's obviously going to mean you're trying to catch a falling knife. So my preference is always let momentum show us, especially when the charts are, let's say, a little bit unclear in terms of momentum right now. I'd want to see price pushing higher so that we are in a bull phase, and then as we break out we can look for that retest. So that's my clues on Sol, and I'll be looking for more upside on Sol. Now Sol obviously has a nicely correlated chart that links closely with this, which is SRM. So guys, in your own time, please take a look at SRM. Now I do have to bear in mind that I want to keep these videos relatively short and not go on too long, so I'm going to take a quick look at RUNE, and then we will move over to Dodo as a very final last chart to look at. So RUNE has been something that's been performing really well, and we can see that it was operating in a broadening wedge. We had a nice correction, and now it looks like we've started our impulsive move again. Now there is a key psychological level here at 15, which you can see we've got a lot of wicks here. Price rejected yesterday and this morning, and today we've popped through 15, but we've rejected. I would say probability is we might come back towards 13 before we see that next move up, and that will be identified on the smaller time frames. So here, if we now look at the 4-hour chart, you can see how price has done something similar to what we were looking at on the previous charts, which is we've got this descending wedge. Now the only difference here is price has broken out of the wedge or out of the channel, so we do have that bullish momentum, and this is where we could put buy limits. So at $13 excuse me, we have the weekly pivot, and we also remain above structure. So at $13, if I just show you this, here's the weekly pivot, the blue line, we have structure, and then looking left we've got nice tests of support and resistance through here, 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 and consolidation here. So looking for buy prices in and around 13, and then looking to test those all-time highs around 16.5 as first targets, and then obviously moving higher for additional targets, extended targets. So that's RUNE, and last but not least, I'm going to take a look at Dodo. So Dodo, if you aren't aware, is a market that has basically suffered a lot in the recent weeks, but it's in a very good space, and one I like fundamentally as a long-term play. Now it hasn't been on the markets that long. You can see it was listed, what was it, the 19th of Feb. We had an initial huge spike up towards $10, and then we've been sat in and around that 3.3 3.5 area, and rotating up to $5, $5.50, and then as Bitcoin sold off heavily the other week, we saw it really affect Dodo. But what has happened is we've seen some nice bullish momentum. It's taken us back up above the base formed, and we're retesting that today. So I'm looking at Dodo as a potential, I mean, it is one that I'm looking to invest and hold long term, but in terms of trading for income, it's also looking potentially interesting for another push up towards $5. Now if we think about a $5 move from where we currently sit, you're talking a nice, what's that, it's a nice 40% growth on your capital. So how can we look at that, and what clues can we look out for on the smaller time frame? Well, it's looking already very interesting on the 4-hourly chart. Why? Well, look at what we can see here. You can see previous patterns and drawings that we looked at, analyzed, taking the aggressive C up to the D, which that was fine, but then obviously, you know, this downfall we didn't see coming. Obviously here's the big momentum move after the Bitcoin drop, but what we have seen is we've seen buyers re-enter the market. We've seen this potential false break of the base that's formed, momentum back up, and now we're testing again. Now one way of looking at this is you could do a swing type entry with entries above here and your stops underneath this area. Initial targets of 4.7 and 5.6. I think they'd be the smart sort of technical areas to be looking at. Target 1, target 2. And then if it is one you want to keep for a long-term play, like myself, then obviously you can leave a small proportion of your trade onto it to run for as long as you see fit. Okay guys, that's it from myself, Mark, and the team here at Crypto Collective. Sorry it's a little bit longer than normal. It's just touching 15 minutes, and if you do like the content, please make sure you like, share and subscribe. You know, we are really trying to help as many people in this extremely volatile place to understand how markets move. And just watch out, we are going to be releasing our latest PDFs on some very, very interesting coins. Okay, have a great day and we will see you tomorrow.